Thank you for joining us for today's edition of MarketPulse presented by Lodestar Advisory Group. My name is George Corrali. I'm the Managing Director here at Lodestar. We are a fee-only, registered investment advisor specializing in actively managed ETF, mutual fund, and closed-end fund portfolios. I'm a certified financial planner and member of the National Association of Personal Financial Advisors, otherwise known as NAPFA. NAPFA is the premier fee-only financial planning organization in the nation, and its membership standards are the highest in the industry. We recorded this presentation after the close of the market on Friday, January 9th, 2015. So what we're going to do here is walk you through a few charts, but first I want to talk to you about some obligatory disclosure information. You should not construe anything we talk about here as a recommendation to buy, sell, or hold any security. You should always do your own research to determine whether the securities we talk about are appropriate for your portfolio. As you know, investing involves the risk of loss, and investment should always be made based on your specific needs and objectives, goals, time horizon, and risk tolerance. Remember, Lodestar's clients may own securities mentioned in this presentation. All charts and other statistical data were obtained from sources which we believe to be reliable, but we do not represent that they are accurate or complete. And finally, all opinions expressed and data provided are subject to change without notice. So let's jump right in. This first chart is a chart of the Spider Gold Trust Shares ETF, symbol GLD. And this is a chart that goes back to late last summer. You can see here the well-defined downtrend into the October low here with a nice rally from this low and a subsequent decline into the November low. The November low coincided with a break here of the lower band of the RSI. And since that time, we've made a series of higher lows from this bottom. So technically, this is setting up very nicely here. This blue line represents support. We've recently broken through the 50-day moving average and are headed up towards the 200-day moving average as represented by this red line. So GLD is up 3.25% in 2015. This is a chart of the Market Vectors Gold Miners ETF, symbol GDX. Again, this chart goes back to late last summer. GDX, by the way, is an ETF that owns a basket of 41 gold miners. So here we can see a well-defined downtrend, again, that seems to have bottomed in early November. This blue line represents support after a series of higher lows from this bottom. So we're actually moving up again towards the 200-day here, which is represented by this red line. GDX is up over 12% so far this year, making it one of the top performing ETFs so far in 2015. This next chart is a chart of the iShares Silver Trust ETF, symbol SLV. And again, this is a chart that goes back to late last summer. A downtrend here. Here's an interesting point I want to bring to your attention. Here you can see we broke through the RSI, the lower band, and this represents here, this area here, a severely oversold condition. So just because a stock or a security becomes oversold doesn't mean necessarily that it can't go lower. And that's basically what's happened here. You'd think that this area would be a good buying opportunity, and then it kind of moves upwards to sideways before another leg down into the November bottom here. So again, this blue line represents support now, as we've had a series of higher lows, and SLV is up 4.71% in 2015. This next chart is a chart of the Global X Silver Miners ETF, symbol SIL. Again, a chart that goes back to late last summer. And this is a ETF that holds quite a few silver mining companies. And you can see a well-defined downtrend, a bottom in November, a nice little rally, a decline into mid-December, and then we're rallying off that once again. So here you see actually a double bottom. And we broke through the 50-day moving average, which is this blue line here, headed back up towards the 200-day. SIL is up almost 9% in 2015. An alternative way to play the breakout in gold is to purchase shares of individual gold mining companies. One particular stock we like here is Siboney Gold Limited, symbol SBGL. Siboney owns and operates underground and surface gold operations in South Africa and has over 33,000 employees. Siboney is currently exhibiting strong technical attributes and has been in a condition of outperformance over the last several weeks. So again, this chart goes back to late last summer. You can see the downtrend, but you'll notice that we never broke the lower band of the RSI, the Relative Strength Index, where in the other charts you saw an oversold condition in all of the other charts we previously viewed. So here you see a bottom in November and a series of higher lows from this bottom. The blue line here represents support now, and Siboney busted through its 50-day moving average and then moved up sharply to break through its 200-day moving average. So very strong attributes in this stock, and it's up over 21% this year. Phenomenal return in only a 2-week or so period. So to sum up, it appears that the technical picture for gold, silver, and their miners has improved for the first time in several years. We may have actually put in an intermediate term bottom in the precious metal space. Price action in the coming days and weeks will offer further conclusive evidence. As a close below 1,150 in the price of gold will negate the current uptrend. So 1,150 is the key level to keep your eye on. And if we close below it, in terms of the price of gold, it may negate this whole breakout move across the precious metal space. So that wraps up our presentation for today. Lastly, I just want to mention that we provide MarketPulse presentations on a periodic basis, but we are speaking with clients and prospective clients here in our office in Short Hills, New Jersey all the time. We offer a free portfolio review. We'll go over your goals and objectives, provide a professional second opinion with respect to every position in your portfolio, and discuss some different strategies that you may be able to implement to achieve your goals. You can call us at 973-218-2440 to schedule that. You can also send us an email. The general email for the company is info@ldstar.com. My personal email is gcorrali@ldstar.com. So you can email me directly if you'd like, and I'll be more than happy to answer any questions you may have. Our website address is www.ldstar.com. And I'm also active on Twitter for those of you who may be more social media savvy. My Twitter handle is @GeorgeCorrali. Thanks so much for listening to today's edition of Market Pulse. We'll see you back here soon.